So how do you prepare yourself for a forthcoming recession? This is a question on which I made many videos. So welcome to Subramani. So first, keep checking your asset allocation. Are you happy with that asset allocation? If the market were to fall today and you were to be hit by something else, like I said, some child getting into trouble, financial trouble, making some big mistake, or some big medical expenses, right? Some legal expenses. This can be crippling in this country. Legal expenses or medical expenses can be crippling if you're not covered, and you can never be covered for legal expenses, right? You can be covered for covered for medical expenses, right? So things can go wrong if you are a slightly visible person in the radar of many people. You can go through real tough times, and lawyers can be very, very expensive, right? So it could take a toll on that. So be sure that you have enough money to meet any such eventuality in cash, and because there's not a time when you want to sell your shares. Check out on your age. You started investing at 30 and you had a high risk taking ability, but at 65 your risk taking ability may have gone down. Your wife may not be doing very well. You may not be doing very well from a health point of view. Children may not have got settled properly at so be worried about those things. If you can't sleep well at night because of the fluctuation in the prices, in equity prices, you're too much in equity, go and sell some equity and put it into debt. But please understand, this is all generic advice. See what suits you. All right. So very important, don't be seduced by, don't look at some one deal that you did where you made a lot of money and saying, wow, look, I'm great, now I can build my retirement portfolio with this. You can't, right? So I can show you a lot of my success stories in one single share where I put an X amount and it became 2x or 3x. But what impact did it have on my portfolio is very important. There's no fun in saying, oh, I got fantastic returns in Bharti Airtel. How many shares did you have? 200. Doesn't really matter. It doesn't move a needle at all. In my portfolio, for it to move the needle, it has to have at least one more zero, if not two more zeros. Only then will it have some impact, especially if it doubles from 400 to 800 or from 800 to 1700. The impact has to be two ways. There has to be enough quantity and enough change in price. Don't get carried away by, oh, I bought this at 33 rupees, now it is 43 rupees. It doesn't really create too much of an impact. If you have 8,000 shares, it's only 80,000 rupees. If you had 8 lakh shares, then it is 80 lakh rupees, right? So see how much you have, and don't let your short-term success in many of these things impact your total portfolio. Don't let any of these things say, oh, therefore I will get rid of my old portfolio and fill it up with all these new shares. This is the future of India, right? So I will get rid of the State Bank, Larsen & Toubro, HDFC of the world and start filling up with Zomato and Paytm and shares like that. Nothing right, nothing wrong. See what suits you. Don't see what suits me. I have made money in Paytm. I have not made money in Paytm. I have made money in Zomato. I have made money in Indigo. These are shares which people tell you never to invest. But I invested in Indigo right through COVID times, and I'm sitting on damn decent profits. In fact, my profits from Indigo is enough to cover my travel costs for the rest of my life. Which you can see is not really much. But remember that these things are individually told to you. It does not matter what percentage it is in my portfolio. What matters is what percentage it is in your portfolio. Don't give up old shares because new shares have come, because the old, your pharma, your banking, your infrastructure will continue to do well. Only when there is good roads, good vehicles, can the Zomato guy go and deliver, right? So remember, some of the old values don't fail just because you see all the new companies making money, or maybe all the new companies are not making money, therefore you have not bought and not participated, and now you're hit by FOMO saying, oh my god, I should have bought at 50 rupees, now it is already 80 rupees, right? So forget all that. Don't let that FOMO get into you. Don't stock up too much on illiquid securities, right? Taking a concentration risk on an illiquid liquidity risk and concentration risk, this can hurt very badly. And when the market comes down, the Small cap shares behave very badly. They will just become illiquid, or they will be hitting a lower circuit every day for 4 or 5 days, and it can completely you can be a nervous wreck end of it, right? So be careful about what quantity and what quality you are buying. Don't combine the two. Don't combine liquidity risk with concentration risk, right? Read a lot of get rich quick stories and understand wealth creation takes time. You can get rich quickly, you cannot get wealthy quickly. It takes time to build wealth. It takes time to build a portfolio, whether it is patience, whether it is equity, whether it is real estate. Only time helps you build a portfolio over a long period of time. Time is very important. Don't take too much of a concentration risk on a particular sector, right? So there will be a time when the market capitalization of Sun Pharma will be more than the market capitalization of the automobile industry, or the market capitalization of one tech company will be more than the whole construction industry or real estate or things like that, right? So suddenly you will have a boom in life insurance, and therefore the market cap of HDFC life insurance or SBI life insurance will be more than some other maybe the banking market cap, right? So beware of such things. When such things happen, these are a fantastic indicator that you are going to hit recession in that industry. In those investment of yours are going to take a very big beating, right? Once upon a time, DLF market cap was more than the Tata Group. Feels like a joke. You will again see such things happening. I'm not saying it will happen to DLF, it could happen to Sun Pharma, it could happen to HDFC Bank, it could happen to anybody, right? So be careful about those things. Don't take too much of a concentration risk, especially in a small cap. You will never be able to exit, right? Very important, when you think the market is going up and you have leverage position, please sell your leverage position. So Rakesh Jhunjhunwala was a very smart borrower. He knew how much to borrow. He knew that the dividend income which he does not need can be used to pay as interest, and therefore he could borrow. So he had brains on how to borrow, right? If you don't have all that, it's very difficult for you to borrow, make money on a sustained basis. Banking is not an easy business, right? We've seen enough graveyards of banks to know that. So don't borrow and invest. I'm anti borrowing and invest always, but today I cannot talk anybody into saying I will not borrow to buy a house. They think that's their right to buy a house in their 20s, and people will give them money. Of course, people are happy to give you as much as you want, 2.5 crores, 3 crores, 4 crores, you will get your loan, then you will buy, right? But be careful about leveraging and buying equity stocks. It can be very dangerous, right? When the markets are booming is a time when you should reallocate. I have said this earlier, keep on checking your asset allocation. This would be a great time perhaps to sell your equities and buy bonds, and this is the time when people withdraw money from PF, PPF, wherever it is possible, and buy single stocks without understanding the risk. Don't do things like that. It can hurt very badly. It can backfire very badly. Don't change your asset allocation because one asset class is booming. That is exactly the reason when you should be selling, right? Keep looking at long-term trends. So if you talk to some people, or if you are on YouTube watching some particular type of videos, and YouTube has this terrible habit of giving you the same type of videos again and again, you will be convinced that this country is gone to dogs, right? And you will believe that you should sell everything and migrate. That is one view to look at it. The other way to look at it is look around yourself. Last say 30-40 years, is there anybody whose standard of living has gone down? To me, the answer is no. Everybody now travels by air. Everybody has a car, a bigger car. Everybody has a 3 BHK, 4 BHK, right? People are buying, even in cities where people can't afford, people are buying. So don't look at some short-term trend and worry about the next 30-year trend. We don't understand. We have to understand only one thing. We cannot take the short-term trend and stick it to a 30-year trend, right? So people will talk of nostalgia, etc., etc. But remember, we are in very good times now. our money can be used more efficiently. There are channels like mutual fund, ULIPs and all available. If you don't want them, you can still go and do direct investment, or if you want a little help from them but not too much, you can go into index funds. Various range of activities are available, right from zero involvement to discretionary portfolio management, where you discuss with the guy who's managing your money and then he invests, right? So these things are possible. So don't worry too much about short-term trends and what people say during an election year, which we are permanently in an election mode anyway in this country. So if you listen to the BJP, you think the world is a fantastic place and India is going to great heights. And if you hear the other side, then you think, oh, 10 years of this government has been a waste, see how much they have damaged, etc., etc. You will never be able to make up your mind, so don't bother too much about it. Remember, today a lot of help is available in form of mutual funds, ULIPs and DIY aids are available. Go take help. It is not a single journey which you have to do. Make sure your family understands what you're doing, involve them, make them understand the risk. Try explaining risk the way I explained to you. If you can't do that, make them see the video, come back to me and say whether the video was good or bad. Thank you.